I'm more bullish on Bitcoin than I've ever been, to be honest. But that doesn't mean that a bear market still doesn't behave like a bear market, right? It's just so all these pieces of news, this is fundamental news. This is like planting seeds in the ground. You're planting a good base, right, for a bigger crypto world in the future. It doesn't happen overnight. You know, you don't wake up the next morning after planting a seed and it's sprouted. It takes a little time. So people have to be calm. They have to be relaxed, and it'll happen eventually. Let the bear market play out. Use it as an accumulation for good quality coins, mainly for me, Bitcoin and Ethereum, and you will be rewarded at some point. There's no doubt that things are going in this direction.
In a recent interview with Crypto Banter, market expert Gareth Soloway shared his bullish views on Bitcoin's future. Amidst the turbulent cryptocurrency market, Bitcoin now trades at $25,860, reflecting a 1.75% decline on Saturday. Recently, Bitcoin movement has broken past a significant bearish trend, actively engaging with resistance territories, especially crucial points at $26,400 and $26,500. As bears drag Bitcoin below the pivotal $26,000 threshold, speculations arise: is another tumble to the $20,000 level on the horizon? During the interview, Soloway mentioned that Bitcoin's current negative trend could potentially result in another price decline, potentially reaching as low as $24,800 or even close to $20,000. He mentioned if Bitcoin break that level and go lower, like to $20,000, it might be due to the overall stock market. The S&P 500 and Nasdaq fell on Thursday, with Apple leading declines in megacap growth stocks on concerns over China's iPhone curbs, while a fall in weekly jobless claims stoked worries about sticky inflation. Apple dropped 3.6% on news that China has widened curbs on the use of iPhones by state employees, requiring staff at some central government agencies to stop using their mobile phones at work. Bloomberg on Thursday reported that China planned to broaden the iPhone ban to state firms and agencies. Soloway suggested that a decline in major companies like Apple might have an impact on the cryptocurrency market. Let's direct our attention towards the few clips from interview.
What we basically have going on here is just the continued kind of negativity in crypto, which, by the way, that sets us up for a potential one more little flush, maybe down to 24.8, maybe close to 20. And then I actually think you're going to get a bounce out of that. So again, shorter term, a little downside, and then get a relief rally to kind of coax bulls back in. Because right now, I'm sure you've seen it, but I mean, the amount of tweets about Bitcoin are just collapsing. I mean, people are just getting indifferent to it. And that's actually a little bit of a bullish thing to see. You want to see that when you are trading. It tells you that you might get a short-term relief rally. Now, in terms of the death cross, you can't deny the drops that we've seen historically when that occurs. I'm not a huge believer in it in general when it comes to the stock market. I don't put a lot of stock in it myself, but I think because there's more retail in crypto, it tends to have a bigger impact. Like, emotion is just a bigger part of cryptocurrency right now. So I think overall, I would just take it level by level. Right now, we have this very significant, this is the BlackRock level right here. That was where that news hit and we popped up. We still haven't retested it. So right now, I mean, if you want a silver lining, you still have higher lows, right? So you have a low, higher low, and even over here is a higher low. If that were to break and we get a lower low, I think then you probably head down to 20,000. But I still think, and this is the kicker, guys, and I want to be clear, I don't think Bitcoin has any negative news coming in it. I think, could you have some negative news from other sources in crypto? Of course. I mean, there's other bad actors, I'm sure. But the negativity in Bitcoin, if we hit 10,000 in Bitcoin, to me, it's because of the NASDAQ collapsing, right? So for those of you, I don't know how many people are watching this right now, but you're in a position where the NASDAQ's had a huge rally off the lows, and now you're seeing stocks like Apple getting absolutely trounced. I mean, Apple in just 2 days has given up the last 14 days in price action. So
that's because of the China. That's because of the China news. So I mean,
correct. Yes,
that's the China news,
and I also think, I mean, like, realistically, a lot of people don't look at the books, but Apple's revenue is dropping year over year. It's going down. I mean, they are a company that you could arguably say is over the hill. That might not be popular to say, but they're not growing at 10, 20% like they used to grow anymore. And they're kind of getting to that old school company status versus NVIDIA, which is more of the new age, right? This AI phase. So again, if Apple, being a $3 trillion company, if this starts to lose it and comes back to these October lows down here, why wouldn't crypto potentially get flushed out? So I think, again, for the positive is for crypto is that it's not going to be a Bitcoin negative thing. I think there's only positive news that we're seeing coming out, which is building the base for the bigger bull run. But the overall stock market could actually take crypto down to that $10,000 level.
The US dollar has maintained a firm position, supported by robust job market data. The Department of Labor reported a decline in initial jobless claims from 229,000 to 216,000, surpassing market expectations of 234,000. After this news, the dollar index extended its gains while currently testing the resistance level. In the interview, Soloway mentioned that he's thinking about putting his money into things like gold and some cryptocurrencies. However, what the US dollar does is crucial in deciding if he'll go ahead with these investments. Capital is steadily exiting the ecosystem, resulting in smaller and less impactful price fluctuations. The same group of participants is mainly reallocating capital within the market. The graphic shared by Forecastor, showcasing the diminishing bounces in meme coins, provides valuable insights into the retail sentiment within the crypto market. This pattern underscores the current state of the market, with decreasing momentum and enthusiasm. Soloway explained the reasons why this happened in the market.
So the reason why this happens in bear markets is that essentially people that bought these coins late, the early ones, but they bought late in the initial move, they've gotten burned, right? So in general, it's like a kid touching a hot stove. You know, you touch it once, you're like, holy crap, that hurts. And then you might get lured into doing it again, but there's less over time because more and more people get burned. They say, why am I going to mess with this anymore? And so that's why you have that downsloping kind of trend line on those different meme coins, just more and more people getting burned. Now, the other factor, too, is that the Fed is sucking liquidity out of the market, right? I mean, M2 money supply is declining. Higher interest rates takes money out and puts it in treasuries because you can get a better return there. So there's just this general, it's like a vacuum that's just sucking money out of the system. So there's less money to be put to work in these things as well. The death cross scares everyone into dumping. And then when everyone panics and sells, there's way too many bearish people in crypto or in Bitcoin. And inevitably something positive will happen and those shorts will have to cover. The people will say, oh, I shouldn't have gotten out. Now the good news is coming in. The death cross becomes kind of like the old thing. It's past and people don't remember it. And you get this retrace back, bounce back. So that's very common in most charts. Most charts will break key levels and then retrace back to the level. Dixie it's just so strong right now. Today, again, we're up again. Now, this is the kicker, is that the jobless claims numbers came out, and generally this is a weekly number. It's not that big of a deal, but the numbers were the best, meaning the lowest numbers of people filing for unemployment since February, right? So it just shows another strong data point that could push the Federal Reserve to hike rates. And the dollar's obviously grinding higher on that. Higher rates is good for the dollar. It means the dollar is more stable. It means rates are going to be, more people will want to be in the dollar to get these type of returns in treasuries. So I still am in the camp that we're probably closer to the end of the run in the dollar than the beginning. I'm a big buyer of gold right now. I'm even nibbling potentially on a few little cryptos here and there for bounces. But again, that's all, if I'm going to make money on gold, the dollar has to come in. There's no doubt about it.
Bitcoin could be in for a positive price action considering the position of whales in light of an upcoming death cross formation. Bitcoin's current performance is a stark contrast compared to its performance 12 months ago. In fact, one could argue that Bitcoin might be at the early stages of its next bull market considering its current premium. But does it mean that the worst is over? This concludes our discussion for today. We encourage you to share your thoughts in the comment section below. If you found this video informative, please give it a thumbs up. Don't forget to subscribe to our channel to stay informed on the latest news and videos. Thanks for joining us.